welcome back. Today we are going to be going over top-down analysis. There's really no intro needed to top-down analysis. It is what it sounds like, so let's hop right into it. All right, so traders should always start with a top-down analysis. This is when you start analyzing your charts from the higher time frame, working your way down to the lower ones. This will help you identify key levels in the chart. Okay, we look for points of interest on the higher time frame to analyze on the lower time frame. So you want to start with something like the daily, the weekly, the monthly, and you want to work your way down to the hourly and so on. You want to start by looking for elements like supply and demand, order blocks, imbalances, trend, breaker structure, all the elements of smart money concept. All right, so before I really start talking about this is an approach that I use specifically when it comes to top-down analysis. There's two different ways that I do top-down analysis. There's a long version and a short version. I'm going to give you the long version right now. Basically, the order of the time frames I'm about to go over doesn't need to be done every single day because of how long term of a view it is. You can stick with starting from either the weekly or daily time frame on a daily basis. You might want to do something like I'm about to go over once a month or something like that, because you're starting from the yearly. You want to get a big picture, okay? So on the yearly, there's not a whole lot done there. You're mostly just looking at the bigger picture. You don't even need to really mark anything up. 6-month chart, mostly still looking at the bigger picture. You're starting to identify key areas. You might mark something up on this one, depending. It just depends what it is. You're still just trying to get an overall feel of the sentiment of the market. On the 3-month time frame, you're going to start to identify and mark up order blocks to refine later as you go down. Now, one thing I want to talk about, when you're starting with all of these time frames on these higher areas like this, you're not going to want to keep every single level on your chart. What you're going to end up doing is, like, so say you mark out an order block on the 3-month. If you get to the monthly, if there's a way that you can refine it and make it better and more precise, that's what you're going to want to do. Once you get to the daily time frame, you want to leave at least your daily levels on your time frames when you go down, but we will get to that when we actually get to the charts. Okay, so on the monthly, this is where a lot more of the analysis starts. You can get more information from this time frame than realize. Don't get caught up in the information that is too old from decades ago. Look for elements of smart money, especially manipulations. All right, so on the weekly, you want to continue noting the manipulations. Order blocks and institutional candles start to become much more important here. Weekly candle closures are important to factor in as well. One thing I want to mention is the monthly and the weekly, a lot of the information is gonna, at the end of the day, be the same for you. So these you can kind of blend together a little bit, but don't overlook one or the other, you know, so the areas are still true. On the daily chart, this is the most overlooked chart in my opinion. Here we begin to note daily highs and lows as well as other significant highs and lows. We begin to factor in the current market structure, looking for recent order blocks and imbalances that price may be heading to fill in. Don't forget the manipulations and breaks of structure here as well. On the hourly charts, here we begin to factor in specific time frame trends to that which you are on, whether it's the 1 or the 4-hour chart. I don't have a preference, like what do you do on the 4-hour and then drop down and do on the 1-hour. There's no preference to me here. Here on the hourly time frames, you're just looking to refine the points of interest that you found on the higher time frame. Is supply or demand in control? On these time frames, we can begin to look for Wyckoff. I haven't gone over Wyckoff yet. That is actually the next video, so just be patient and make sure to check out that one. On the lower time frame, the 1 minute, 5 minute, and 15 minute, don't forget the higher time frame trends. Absolutely do not forget the higher time frame trends. Always trade in line with the higher time frame trend unless you have a bias for why there should be a counter trend trade. Okay, we monitor price when it gets to our point of interest on these time frames. What is the time of day? Is there Wyckoff? We use lower time frame for a better risk to reward. So let's actually do a top-down analysis. All right, so I'm going to do the top-down analysis on EURUSD, and to get to the 12-month chart, all you got to do is type in 12 and then M, and that goes to 12 months. All right, so like I said, there's not a lot that you do in here. You just want to look at this just to see, just to know, okay? But what can you see? If I was going to mark this up, I see this imbalance that got filled almost perfectly. It came into this order block, so we're bullish, right? Higher high, higher low, higher high, higher low, higher high, high or low. So I'm going to ultimately delete this because there's going to be a lot more that I'm going to mark up. But remember that we just had this big wick that filled in this imbalance and came into this order block. So what did we get from the yearly? We are bullish. You want to drop down to the 6 month. And here we go again. Like I said in the notes, you don't really need to mark a bunch of stuff up on this, but you want to look at it just to identify. So right away, we still notice that this area has been revisited and rejected from. And this is the extreme point in this leg of structure right here. Something that you could do on this is maybe pull a fib just to see where we lined up in the fib. See, we came right into the smart money kill zone. Look how these bodies of these candles actually respected the 7-1 here. This came down and came all the way into the between the 788 and the 886. So something that you could do on like the 6 month time frame if you're trying to measure a price swing is just draw a fib or something like that. I mean, I feel like this is helpful information for me, so take that for what it is. All right, on to the 3 month. Okay, now we're on the 3 month chart. Oh, and something that I forgot to mention about the 12-month chart is if you want to, this is up to you. You can mark out the previous year's highs and lows also if you would like to. You don't have to, but you can. And say, for instance, you're looking at the yearly chart, like on like your monthly top-down analysis day or whatever, and you happen to see that you're getting close to the previous year's high or low. That might be the time that you actually mark it out. You don't need it on there all the time. You want your charts to be as clean as possible. You don't want to cloud your judgment with a bunch of different lines on there. I mean, on the 3 month, I will start to mark some things out, but it all might get moved around a little bit, so keep that in mind. But I see that there was a bunch of liquidity sitting here that we went through and came into this. Did we come into this imbalance on this time frame? Let's see here. Yep, we just literally wicked right into the imbalance on this time frame. There's no need to mark out the order blocks here. We see that we're in the imbalance. Something else that I see on here is this is a high that we're probably running after. So we want to know what happens when we get close to there. But remember, we always want to be looking for the manipulations and what happens afterwards. So we had a manipulation here, and we want to see where price goes from here. Now we're going to move to the weekly time frame. And remember, some of these lines that I just drew may get moved around a little bit. Besides this liquidity line right here, this is going to stay here, at least for now. And whoops, I skipped a time frame. We actually want to go to the monthly time frame. My bad. And so see, the monthly honestly really looks like the 3 month. We got the same information here that we got from the 3 month chart, because you don't need to go back and look at all this stuff. There's no need. All you need is to know that we just came into this point of interest here and started to rally away. Now we're on the monthly, right? So something else that you could mark up here that might get moved around, which probably is going to get moved around, is this imbalance here, because you notice we just took out this right here, and I feel like on the weekly that's going to show up as a high that actually was ran, and we will see when we get there. Another thing that I see is monthly order block. Okay, so as of right now, this is really all you would need this moment on this. Now we're down to the weekly time frame, and so now we only really want to concern ourselves with this price leg and this price leg. We don't need to go back here and look at all this. We have our blue box down here signifying that we are inside of the imbalance. All right, so what we want to do is we want to refine this imbalance to correct area on the weekly. Okay, and what did I say? On the monthly, this was just a candle, an up candle here. It's actually a high on the weekly that we have just taken out. And what happens after you take out highs, a lot of times there's a retracement. And what else could you do here on the weekly? You could measure your fib. You could take your fib and place it on here and look at this time frame and just see where things are lining up. I don't really like the way that fib is lining up with this price action, but because at this point, as we get down time frames, we want to look at recent information, because we can't do anything with all of this right here unless you're looking for sells. But we literally just said that we should be bullish, right? I still think that we have everything marked out on the weekly that we need. So let's go to the daily. And now remember, the daily time frame is not a time frame that you want to sleep on. You can get a lot of information from the daily. You can even trade from the daily if you would like. So first things first, I'm going to refine this imbalance even more. And now why am I not looking at like this imbalance here? One, because we're already in it. There's no other imbalances for me to use except for maybe this one right here. But the reason I'm looking at this one is because it's the same one that we started with on, I believe, the 3-month, and we want to refine it down to make it more precise, because it's still coming from a higher time frame area, so it holds a lot of weight. And we want to notice that we took out previous structures. We took this structure right here, we took this structure, we took this structure, we took this structure, and we took this structure. We've been breaking structure to the upside for a long point of time. And now what else do you want to mark on the daily? Okay, on the daily, you would want to mark out this right here. This is a recent order block. There's really no need to go down here and mark out all these different order blocks. You want to look at the most recent one, unless you're interested in a specific one below it or something like that. But we're on the daily chart, so you want to look at what is most recent. And if we're bullish, you would expect to see a continuation from this, or an area down here like this. But still, this is the most recent area, and there is a possibility that price could react from here and go up. So you want to look at the most recent one, but you don't want to trade anything unless you have a confirmation. So I believe you could actually go down time frames here now to the 4-hour, and this is when you're going to start really getting into intraday stuff. Okay, and I would refine this down to just the top of this down candle here, just to make it look a little bit better. You can start to mark out equal highs and liquidity and stuff. This is relative equal highs right here. We got an order block up here, we got imbalances up here that price might be drawn to. We got this right here. Price is just broken through this low right here. It didn't break through it a lot, but it did break through. You can also note the imbalance in here, which is humongous, which will probably get refined as we go down time frames. And as you can see, your bias and what you're looking for should almost stay the same throughout the time frames. Like for me, I can normally see what I'm looking for as soon as I'm on the daily. Once I get on the 4-hour and 1 hour, I'm just looking at it better. You could measure the fib on this. I don't leave my fib on. I just check it whenever I feel like I want to. And then you can look down here if you really feel the need to. You can mark out liquidity. You can mark out other order blocks if you want to, but I'm going to tell you not to do that. You don't want your chart to look like a striped pajama. All you need here is to know that price is here. This is the most recent high right here. Down here is an order block and imbalance, reasons for price to be drawn down there and reasons for price to reject from there as well. So let's go down to the 1 hour. And now on the 1 hour, you want to start marking out other imbalances like this one. We see that there's relative equal highs here. We see that we've been breaking down. So if we start to move up first, we could see sells from this area, or it could just completely go through that area as well. You could be marking out areas like this just to see how price reacts when it gets there. But like I said, unless you're actually interested in the area, there's no reason to point them out. But these areas right here could very well be valid areas to sell into, to go down into this area down here. There is other elements of time and price that you can use when marking up your charts as well that we're not going to cover here, because I just want you to get used to doing a top-down analysis by looking at points of interest and refining them all the way down. I don't want to mix in time and price with it already and confuse you, because then you have two different things that you're trying to do. I want you to do top-down analysis for the purpose of looking at points of interest, order blocks, imbalances, liquidity, things like this, manipulations, so that you can see what they translate into from the higher time frame to the lower time. Because I mean, look at this line right here, this entire segment of price action right here, this entire down move, this is a daily order block. And if you're just looking at this from an hourly perspective, you may not look at this and think that this means anything. You might be looking all the way down here or here for this order block, when in reality, price could really just come here and reject from here and move away, and you never even know what happened. See, there's that order block on the daily. Like I said, for the most part, top-down analysis, you can just start from the daily if you want to. Like, you could just come here, and the daily gives you all the information that you really need to trade intraday. If you're a position trader, you might want to go and look at it from the 12-month all the way down. But top-down analysis is something that we're going to practice together in the live sessions. So make sure you took notes. If you didn't, go back and take them now, and then start practicing top-down analysis. Look for your points of interest and refine them on the way down. Identify the trends. As of right now, EURUSD is in a bullish trend, right? We were in a bearish trend for a long time before that, the whole second half of 2022.